Hi traders, this is the last video. This is Mun, and let's recap everything that we've learned so far and put it all together. So 40% of your swings, guys, of your trading should be in momentum stocks. Again, these are stocks in very nice upturns. Relative strength, RS, is very strong, right? So this is stronger than the S&P 500. These are themes. These are stocks that a lot of money are going into. You want to make sure you capitalize on this. Look for bull flags. Look for semi-triangle formations within these patterns. This is what the money maker. This is where you make a lot of great money. The second is the 30% in mean reversions. Okay, so 30% are in the golden pocket zones. So these are stocks that had ended the cycle, but now coming down and they're retracing back towards where the 618 level of the prior trend. So you want to buy between the 618 and 786 Fibonacci ratios, right? So this is your chance to buy amazing stocks at discounted prices. Again, discounted prices, swing highs, swing lows, right? The discounted prices are down here. The premium is up here. You want to always buy in the discounted areas. Now, the third is 15% in accumulation phases. Okay, so 15% on stocks, 15% on stocks that are bottoming out, right? So these are sort of your laggards, right? Late runners. So these are accumulating at the lows. So when the S&P 500, they're going high and it finally starts to move sideways, this is when the late cycle movers start to break out and catch up to the rest of the market. So you want to make sure you're exposed on that as well, 15%. And then finally, the last 15% is, of course, your main hedge. Your main hedge is when the markets go down, okay, you capitalize on the hedge. So again, when the markets go up, you start hedging, you start buying oil. And when it comes back down, right, you make money on that hedge. Then you use that money from the hedge and you recycle it back into buying more longs, right? So it's just a cycle. You always have money to continue buying the dip because you're hedged 15%. So when do you hedge? Again, you hedge when the VIX, when price is at support. When it's at historical support on the monthly and 3-month time frame, that is when you start buying into your hedge. And when the VIX goes up and hits resistance, this is when you sell your hedge and buy stocks. Sell hedge and buy stocks. Buy stocks, right? So that's how it happens, guys. In between, you don't do anything. Okay, you hedge at the lows, you sell your hedge and buy stocks at the highs. So that concludes it, guys. If you have this portfolio of 40, 30, 15, 15, you cannot lose. I guarantee it, because you have so many, you're buying amazing stocks because of momentum. You're catching the lows of the mean reversion at 30%. You're catching the late cycle runners at 15, and another 15, you're raising capital if the markets go down. You cannot lose, guys. I'm telling you, this is the best trading secret that no one has ever told you until today. I'll talk to you guys soon. And again, please support us and Ask Livermore and use our scanners. See ya.